I was up like 250, almost $300,000 on the investment. So I was like, look at me, I know what I'm doing. So I lost all that money. Did a quick Google search on podcasts on day trading, and Austin Silver's podcast came up. I originally thought I was a trader, and all I really was an investor. You got to burn yourself, and you got to understand to feel the pain. I came to the desk thinking, I'm going to be so disciplined in trading, everything else is going to fall into place. And boy, was I wrong. And I know multiple people that fail at trading prop firms, but move to trading personal capital and find success. I have all my charts changed to ticks and points. If I traded personal capital, I would probably have spent $5,000 to $10,000 a month. You can spend $10,000 or $100,000. The key is surviving the learning curve. I got my first payout after 14 months. It's tough to explain to people because I know I've explained it to people and they're like, are you telling me just to blow the account?
Randy, thank you very much for joining me here today, man. I'm really excited to get to know you a little bit further. I know we've been chatting for a long time. I've talked about TradersPost, and you've given TradersPost a spin for your copy trading efforts as well. But would love to dive in and get to know where you started trading and kind of the initial stages of your journey. So by all means, kick us off with your intro and let us know how this started.
Awesome, Mike. Thanks for having me. I appreciate this. Yeah, for me, it was I don't know, the trading journey started 12 years ago, and then I took a hiatus for probably 10 of those 10 years. But initially, I've always been interested in the markets. So when I was younger, I had BNN on in the morning, which is the Canadian version of MSNBC, and I just watched that. And it just gave me a sense of I just felt like I was tapped into what I wanted to be tapped into versus just watching the news. And I was always interested in markets and what's going on in economies and whatnot. So I ended up, I'm from Vancouver, British Columbia in Canada. And up here, gold mines are a big deal because there's quite a few of them based out of here. And you knew someone that knew someone that knew somebody that was opening a gold mine or was a geologist or knew something about a gold mine. Anyways, I heard about this stock. I put about $10,000 into it. I had from the sale of a property that I had, and I basically, I want to say like it was 25x on the investment, and it ended up, I was up like 250, almost $300,000 on the investment. So I was like, look at me, I know what I'm doing. I know everything now, and I decided to invest in some blue chip stocks. And there was one specifically called Valiant Pharmaceutical, which was the rage.
I know Valiant. And there was a bill that was shorted by Bill Ackman, actually.
Yeah. Right? And that was, I never even knew what a short, let alone short selling or a short report or any of this was. And I woke up in the morning to this, a short seller coming out on it. And it was, I think I bought it at, I don't know, 250 or 300. And it was down to like $75. And so I started buying more, thinking I will average out. This thing is going to bounce, or average in, sorry. And it basically ended up going to zero. So I lost all that money. And to me, that money represented when I had it, like this was our future. This is going to be the nest egg. I'm going to grow this into something like, even though it was initially 10 grand that turned into that, I put so much weight on the value of that money. It really dictated my life for the next few years, that loss.
Yikes. And
I basically just stayed away from the markets. I was so torn, and I just watched opportunities come and go in front of me over the next 10 years. And eventually when I decided, I had a construction company with a business partner of mine, and I decided it was not, the construction market here started to slow down as in renovations and stuff. And I just decided I wasn't happy anymore. I just wasn't coming home from work, not in a good mood. What I thought I was enjoying life, I wasn't. I was actually, drinking more, doing other stuff more. And it was not conducive to what I always pictured my life to be coming into my 40s. And at that time, my girlfriend at the time, we ended up trying, and she got pregnant. And I just said, now's the time. If I'm going to make a change, we're starting a family, starting something new. Like, I got to do this now. I can't do this when he's here, and it's going to be even harder. So I started listening to, I just searched, did a quick Google search on podcasts on day trading, and Austin Silver's podcast came up.
Okay, yeah.
I listened to episode 1 to, I think, like an episode 100. And I did this for 3 months straight. And then I called them and set up a call with them. And I said, hey, I want to trade Forex. This is what you do. And, you know, I wasn't caught up to speed with the podcast, but I didn't realize that they stopped trading Forex. So he's like, we're not trading Forex anymore. We're trading futures. And I was
futures.
like, what's the future?
Yeah.
And he explained it to me. And I said, you know what, if I'm going to do this, I'm not going to take the route of trying to do this on my own. I have some money put away. I'm just going to go in. It's like, you know, paying tuition to go to university. I'm just going to go all in. I'm going to to start a mentorship, and that's what I did. And it'll be coming on to 2 years this January.
Oh, it's amazing. So a little bit of an interesting journey there. And I wanted to ask about a couple of things. You started in just stocks, which I know Valiant was unfortunately the worst one for you. Were you trading other stocks at that time though, or is it mainly just Valiant?
So it was Valiant. And then there was another company, which was like the Canadian version of Valiant. It was called Concordia.
Okay.
Which also got shorted at the same time.
Oh, why did you choose pharmaceuticals? I'm just curious.
Because it was the pharmaceutical space at that point in time was just it was like AI today.
Oh right, yeah.
It was just a craze. The pharmaceutical, like it was, everybody was putting their money in pharmaceuticals.
They were all growing by acquisition. If I recall, Valiant was really
and Valiant bought up every company. But when that short seller came out, that they were marking up the price of their prescription,
their drugs.
And the CEO turned out to have some other stuff going on. So it was like, I did take a probably 20% of that portfolio, and I put it into a company called Hudson Bay.
Okay.
Hudson Bay is a Canadian retailer, which is like 200 years old. It's in every city. It's a beautiful department store. But what attracted me to Hudson Bay was they owned real estate holdings. I bought the shares at $28, and at that time, the real estate holdings were worth $40. They had stuff in Europe, owned another department store, and all the buildings that department stores were in. So I thought this was a safe bet. This, again, is where I just was so scorned. So I put money into there, and that started to go up, and I was stoked because I had a little bit of money set aside still. And then price started to come down, and it got below my entry price. And I'm like, what's going on with this company?
Yeah.
They have these real estate assets, and all the analysts were like, they couldn't understand it. It got down to $18, and then all of a sudden, the company decides to go private. And all the shareholders, and the majority of the shareholders have been there forever and probably bought in at dollars, agreed to sell their shares for $15.
15.
So now my 15. So my $28 share is now worth $15, and that was kind of I'm done.
Yeah.
I'm out. I'm not looking at stock markets. This is rigged. This is bullshit.
Yeah.
I'm leaving. Right. So
yeah.
That's kind of
and you had decent analysis too. You did the book value on it. You're like, the real estate holdings are worth more. There's an intrinsic valuation to it, right?
Yeah, and it was just it felt really good.
Yeah. And
when it comes to even trading futures now, like when I have a gut feeling, I go with my intuition.
Sure.
So go ahead.
This is fascinating. You got hit pretty hard by stocks, which totally makes sense. And honestly, like you made good decisions, but bad outcomes came from it. I'm curious what drove you then to deciding to trade in an entirely new market. What interested you in Forex before you realized that Austin was doing futures?
Just listening to the podcast and wanting to be a day trader, where I originally thought I was a trader, and all I really was an investor. Like I was trading.
Got it.
Swing trading over such a long term. Like I still actually hold some small positions in some stocks that I've had for like 10 years. Where if you asked me that 10 years ago, I'd tell people I trade. And it's the furthest thing. Now I understand, day trading, intraday trading, swing trading, and then just an investor.
Got it.
Right? Where you're just long-term holding. So it was the allure of being a day trader, and then just having that, getting to the desk in the morning and trading. And originally I thought I'd trade for 8 hours a day. Like I thought that was how cool would that be? Like, come trade for a few hours, go for
Yeah.
lunch, come back, trade some more. Everybody's
Yeah.
making money. Like, it's all fun and games. And then I realized, obviously, as time goes on, initially you want to spend as much time as you can on the charts, but when you get to a point and you start to understand price action and become, start to get those goals of even becoming profitable or just having, your process dialed right in, you start to realize, hey, it's mentally exhausting being at the charts.
That's right.
And that's where
even more than an hour
trouble.
sounds exhausting to me. Yeah, I'm with you on that.
When I love it, you only stream for a short while, and we only stream max 90 minutes, where there's people that stream all day, and I can't imagine.
I don't know how they do it.
I don't either.
That's a lot. So let's talk about what happened once you joined Austin's group. What did you learn in the initial days? And did you ever get to a point where you felt like, okay, this is the aha moment for me. I think I figured this out.
So when I joined Austin's group. My son was born January 2nd. I talked to Austin that month prior, December. I didn't end up actually fully joining until February. And for me, I got paired up. James Bruce was my mentor, and he's
James.
from South Africa.
Yeah.
And he's just a great trader, but he just slowly worked me into trading. And I think I was more interested in not even trading futures or Forex, but just understanding the charts.
Got it.
Just understanding what those candlesticks meant and what, trend lines were and all these things that you hear and see from other things. And I had never followed anybody on social media, so I didn't get that influx that way. I just saw analysts on BNN, and they're talking, and again, not realizing that they're not day trading. These are, again, swing traders building portfolios, investors building things for clients over long term.
Right.
And so once I actually got into the charts and saw that, because on TV, all you see is it's basically a 3-month or a 6-month or a yearly
200
chart.
SMA or whatever. Yeah.
And that's all they ever show. And
right.
Here's where it was, 52-week high or something.
Mm-hmm.
And so as James introduced me to the charts and I started to just see the New York Open and I literally fell in love with the way that market would open, and it would do this. And then so you can see it would go up and then down and up and down, where, you're looking at a longer time frame thing. It's just more of a gradual curve, or unless there's some sort of crazy sell off in the stock. So that attracted me. And I started trading oil out of all things. I don't know why. I think I took a trade on oil, and my first
one, huh?
my first trade was oil futures, and I think I made like $4,000 in a paper trade.
Wait, so you went straight to CL, not MCL?
Yeah, no, CL, no micros. This was
and $10 a point.
I'm telling this to James, and he's like, if you want to just practice with oil and just get the read of the market, and I was like, I just made $4,000, and then I think the next day I lost like 12.
Yeah, that sounds right.
And then I said to James, and James was like, I knew this was like, he knew it was going to happen, but he wanted me to go through that whole thing of, and Austin always talks about this too. And I talk about it. You got to touch the stove. Yeah. You got to burn yourself, and you got to understand to feel the pain. And once you understand the pain, you're going to slowly, hopefully, stop making mistakes. So anyways, went from oil, and then James is like, are you ready? I'm like, I'm ready. Okay, do you want to look at ES or NQ? And he's like, I think ES is better. It moves a little smoother for a new trader. It's not as volatile. And I just focused on it ES since. In 2 years, I've taken 2 or 3 trades on NQ and 1 or 2 on YM. But mainly
ES.
365 days a year, whenever I can be at the charts, unless I'm sick or I'm traveling. Even when I traveled, I tried to trade as much as I could. And it's just been ES.
Got it. So how would you describe your trading style today then? What are the rules you trade by? What's your setup? What do you look for?
So initially, and this is the ASFX group, since big on VWAP. And so I went straight into VWAP. And then as I learned to trade VWAP, when we trade the opening range, and some of us were trading the initial balance along with the opening range, I started to develop my own need to kind of branch out a little bit. And there's, a few different mentors in the ASFX group. Another one, Zach, who he trades liquidity concepts and ICT. And so I really got interested in volume profile.
Yep.
And then got interested in bookmap. And so I just slowly started to incorporate things more and more. And at this present time, I'm trading VWAP, looking for opening range breakouts, using bookmap, and using session volume profile.
Got it. Yep, that makes perfect sense. Do you have any rules that you operate by for risk management? Maybe you can help us unpack like how you've dialed in a system that's helped you remain profitable.
So this, and I will be transparent, I'm always still in a bit of discovery mode. I say it every time I go into 2 or 3 months of, I can't even say 2 or 3 months. Like my last bad run was, I think, almost 3 weeks, where before it would be a couple months of just, losing trades or I couldn't figure it out. So I'm always kind of developing it. And I think this is something as a trader, I don't think you're expected to be like hard on your rules in the first year or two. You can, be kind to yourself.
Yeah.
Understand, like at one point I was taking 5 trades. That's it, 5 max trades, or I'm trading this much size. And now it's a little more dynamic, but I do have some hard rules. And we talked about soft and hard rules today, but hard rule for me is 2 losses. I'm done.
Okay. Yep.
I want to take only 3 trades. And that could be a loss, a win, a loss. And now I'm working on if I have 2 wins or even 1 win being done for the day. I think that's a big one for me.
So just one good one then pretty much.
Yeah, right? Like one and done. But with market conditions the way they are, and when we get these choppy, volatile days, it's got to be, Austin says jab, jab, jab. Like you can't just, you might not get the hook. So you just got to jab, jab, jab. And he does that well. And one thing I was doing for a while is I was in about 3 months ago, I was doing 1 trade a day, win or loss. And it was working. But what I didn't realize, and actually people that I trade with realized, was if I had a losing day, I would just be done with the day. But people could come like message me or say to me in our Discord that, Randy, you're very well at getting your losses back. Like you shouldn't limit yourself to 1 trade. And so then I was like, I opened that up and I actually had a losing morning that I got that back and some almost every time. So that was one of those things where having a hard rule of 1 trade a day, which sounds amazing. Like I'm so disciplined. And
right.
Anybody asks me, I take 1 trade a day, win or loss. That didn't work for me. That might work for some people, but that clearly didn't work for me because usually my first trade, if I'm not feeling the market, and you had a trade this morning, your first trade was a loss.
Yep.
Instead of walking away, you waited for another clear setup, took a second long, stayed in it, got the loss back, and you finished the day green. Right. Or you ended at least, if you're not trading,
break even.
Yeah. Right.
I think it's a law of large numbers thing though, where the opportunities show up multiple times per day, particularly in the first couple hours of the session. And limiting myself to 1 trade is basically slowing down the progress towards the finish line. So if there's 3, 4, 5, 6 more opportunities in that single session, then I've severely cut off the amount of potential opportunities to explore.
Yeah, and I agree. And I think this is one of those, it's a fine line and it can be a slippery slope. But I think when we talk discipline and trading, when you're learning, you got to be really mindful of what you think discipline can be. So
that can be a tough thing for people. So do you feel like this is a natural quality for you, or are you pretty disciplined elsewhere in your life? Or is this something you just built up?
Yes. And this is exactly to go to show, like I'll give you a perfect example is we went to Mexico at the end of September for a month. I've been struggling and I've struggled my whole life with my weight. Everybody that knows me knows about it. I can go up 20, I can lose 30 pounds for 6 months and then just put it right back on. So you can see me sometimes and my shirt's tight. You can see me sometimes and my shirt's loose. It's just something I've struggled with, binge eating or just, the way I can exercise but as I get older, it gets harder and harder to lose.
Yeah, I get that.
Like when I was younger, I could drop 10 pounds on a Monday.
Right.
And I've been really working on this since Miles was born. He's turning 2 in January, and I've had no success. So anyways, we go to Mexico. A friend of ours, Christine, lives down there. I trade with her. We do the podcast together. And her husband is a personal development coach. And so I just asked him, he goes to the gym every day. I'm like, hey, will you be my accountability partner? I have one in trading. Why don't I have one at the gym?
Yeah.
So we start going to the gym every day, and I took a payout the first day I was in Mexico, like trading. So I'm on this high. We go to the gym every day and we go to LA for an event, and I take a trade at the event on my phone, which is a hard rule for me, but it was more fun in a
Okay.
crowd. The market was selling off. I was probably the only person in the room that made money long. And so I was just on this high. And I came back from LA to Mexico, and my trading went some of the worst trading I've had in 6 months. And I went on a 3-week losing streak. And I was really being hard on myself. And what I didn't realize was I still went to the gym every day. I still had harder and better workouts than I've ever had in my life. So here I was beating myself up on the charts and trying to be like, I'm not disciplined. I can't do this. I'm tilting. I'm over trading every day. What am I doing? And then someone pointed out to me like, hey man, or I think maybe Andrew walked up to me on the treadmill. And he's like filming with his phone. He's like, hey, you're that day trader, like making a meme. And I was like, and then he made a video of me doing one exercise and then sent it to me. And I was like, cause he wants me to post this stuff. He's like, put yourself out there and show people what you're doing. Even though you're losing on the charts, you're still going to the gym when you could just be like, I don't want to work out anymore. I'm not trading well, like go eat a bag of chips instead of going to the gym. And so this whole transformation happened with me working out, and I've come home. I've been home for 2 weeks. I've gone to the gym every day. I went to the gym this past Sunday, which is the first time I've done that in my whole life. And I started to really have this aha moment of like, if I can control what I can control off the charts and be disciplined and have that regimen, and we meal prep now the last 2 weeks, and there's, I'm eating wholesome foods and I'm not trying to have protein shakes and all this stuff all the time. It's like the trading will come back. You're going to have bad runs. Like, don't be so disciplined and be like, I can't do this. I'm not going to make it. Cause I was killing it for X amount. You're going to go through periods of drawdown.
Agreed.
And I think if you beat yourself up over it and be like, it's a discipline issue, is it? It can be if you're over trading.
Sure.
But if you're taking 1 or 2, 3 trades a day and they're valid entries, and and Trump decides to tweet that he's going to do X or whatever the hell it's going to do, and you get stopped out, that's out of your control. So it's like now the markets are random and like your law of large probabilities.
Yep.
If I patiently wait for setups, take my setups, follow my rules, over the long run, I will be profitable. So what can I do to make sure that I'm in, mentally and physically in the best shape? Is I can eat healthy. I can make sure I sleep well at night. I can go to the gym every day. These things will lead to you being more disciplined at the desk. And that's where I think people, and I'm one of those prime examples, I came to the desk thinking, I'm going to be so disciplined in trading, everything else is going to fall into place. And boy, was I wrong. I was so disciplined in trading that when I came out of my office, I yelled at my girlfriend for no reason. Or do you know what I mean? Like I was just like unhappy and angry with the way I was trading, that it just bled into everything. Where now it's like, I had a crap day trading. You know what? I get to go to the gym and burn it off. I get to go lift some weights. I never strength trained really hard in my life. And now I have a whole, Christine's husband, Andrew, gave me a whole full workout routine.
Yeah.
And I crush it every day. I used to look forward to a 30-minute workout, and on average, the last 6 weeks, I'm 50 minutes to like 90-minute workouts.
Nice.
So, and then again, like days like today, I had that trade on my Top Step XFAs, and it was just clean, easy. I'm done. Where before it would be like, I got to spend more time at the charts because I don't want to go to the gym. Well, now it's as soon as I'm off the call with you, I guess what I'm doing, I'm going to the gym and I'm looking forward to it. So I think if you start to really control the things you can control, and when you're learning to trade, the market is not one of those things,
right?
You will just have a better understanding of discipline and where you can incorporate the discipline instead of, like I said, I just went into trading and like, I'm going to do this. These are my rules. I can't break them. Well, you're allowed to break rules. It's okay, right? It's what you learn on those days that your rules were broken, how you reflect on it, and just move forward.
Yeah. No, I think you've highlighted an area that was key for me as well, is realizing what's in my control and what's not in my control. And obviously, any trade I put on, anything can happen afterwards. I can't really get upset about price going one way or the other. The market's going to do what it's going to do, but I can control when I put a trade on, how much risk I put on, how often I trade, when I trade, so on and so forth. And I think that it's always helpful to understand how we implement those types of rules for ourselves in the same way that we implement rules for how we govern our lives. Getting into the gym, how often are you going to go? How much recovery time are you going to give yourself? What kind of food are you going to put in your body? That kind of stuff. It all pretty much translates. So I love the correlation there you're making between your workout routine and your trading as well. So what do you think in general, now that you've been in the prop firm space for long enough, a couple of years now, and you've learned from, your mentors, what do you think retail traders consistently get wrong about trading in general, or specifically trading in prop firms?
Looking for a prop firm that actually plays nice with automation? Meet Blue Sky, built for serious traders. And with TradersPost, it just clicks. You connect Blue Sky inside TradersPost, route your TradingView signals to paper or funded accounts, and let it auto-manage entries, stops, and targets. You control risk per trade, filter by session and symbol, and pause or resume with a single switch. Every fill is easy to review in one dashboard. Funded accounts can request payouts daily with launch plans starting at $49. Get funded with Blue Sky. Execute with TradersPost. Apply today at bluesky.pro, BLUSKY.pro, and plug in your edge. Trading involves risk. Use proper risk management.
Well, trading and prop firm, I think it's almost two separate things. Like trading in general and trading and prop firms are two completely different things. Prop firm, there is...
I'm glad you said that. The rules are so much different.
Right? And I know multiple people that fail at trading prop firms, but move to trading personal capital and find success.
Yeah.
Again, and this was I was fortunate to meet another options trader, Sang Lucci. I met him through Austin. He was on stream with us, and he's an older trader, very, very, very successful. And he basically said with prop trading, and this is what I say to people, it is a game, and you have to stay within the rules of the game.
Right.
You can be successful, but don't come into prop trading that you're this great trader on paper and you're going to come in and have these home runs, because it means nothing.
Right.
There's consistency rule, profit targets, ESS scores, not daily payouts. You know what I mean? Like there's so many different things that you really need to remind yourself that, hey, and this is what we were talking earlier on stream, I have all my charts changed to ticks and points. Because to me...
Yeah, because the dollar amounts don't mean anything.
Nothing.
Yeah.
I'm getting unless I'm trading a take profit trader account where it's daily payouts or something, and even then people really need to be mindful of the language used in the prop space. It's all marketing. So
for sure. Yeah.
People message me and say, "Oh my God, take profit trader, the daily payouts are amazing." And I'm like, "Are they?" I'm like, "Do you go to work ever and get paid every day?" I'm like, that's going to put pressure on you one morning to be like, "Hey, I'm going to make $500 today and get paid for it." Mm-hmm. And you end up and there's multiple people that blow their accounts. And then TPT has a beautiful thing where you can pay $500 and reset your funded account instantly as soon as you blow it.
Yeah.
And if you're resetting it as soon as you blow it, you are not trading well.
You're probably on tilt. Yep.
And what are you going to do, right? So it's marketing 101. At the end of the day, they're giving you leverage to trade. They're paying you money. And if you lose money, they're making money. So we have to remember that they're not some saints coming out and being like, "Here, we want you to learn to trade, and here we're going to give you all this." There's a caveat to that. They're going to give you everything, but they're also, when you lose, they're making money. And who was I talking? I don't know if it was Peter or Tom talking about this. Maybe it was Tom, but we're talking about the top step disclosure stat, the 3.5% of of traders. Only 3.5% of top step traders get paid. Take payouts.
Yeah, 97% of people are losing money.
And it was funny because I said to Austin a year ago that I think prop firms were going to actually increase the number, and we're going to look back in 10 years and be like 15 to 20% of people are successful at trading, because now you've opened it up and made it available to everybody that don't have enough personal capital to trade and whatnot. And was I completely wrong? It actually made the number smaller.
And worse than the stats than I think we all were aware of, when we got started in trading in the early 2000s or 2010s, we've all kind of been under this impression that it's like 5% are successful or 10% are successful. The stats usually come from brokerage houses that tell you how many people have accounts that gain in value versus lose in value. So how many traders are really losing traders? And it seems like 90% of people who try trading end up losing, but the stats are even tougher for prop firms, unquestionably.
100%. And it
Yeah.
was I went to a conference Tom Hugard was speaking at, and he was talking about a broker called CME.
Right.
And I think they say right on their website, 78 or 88% of their traders are unprofitable.
Really? Okay.
Yeah. Like
Yeah.
it's a crazy number. Like
Yeah.
Tom Hugard made sure to make a point. He was just saying, how can you think differently? How can you think like the 10%?
Right.
Like,
right.
What you want to do is not think like the 80%. And here's the stat, and I'm showing you. And that brokerage, I'm pretty sure pays him. He's got a sponsorship with them.
Got it. Okay.
So he's promoting the broker at the same time of promoting the stats and then promoting his mindset philosophy. But no, it goes to show that people don't realize that. And then I was saying earlier, when you have a prop firm and you have a credit card, like imagine you could go to your broker and be like, here's my Visa, take $20,000 off my Visa.
Give me another chance. Yeah.
Yeah.
Right.
Yeah. Give me a marker or margin or whatever it is here.
Yeah.
And you get to do that. Like they would look at you like, where a prop firm's like, cool, yeah, I'll take it. Right?
Yep.
And then people get themselves in. Again, I've met multiple people that have put themselves into debt and into turmoil because of trading prop firms and how easy it is. So
yeah,
it's huge. It's saved me, I don't know, 6 figures probably if I tried trading personal capital.
Yeah, let's talk about that, because I think that was a big lesson for me too. Even though I've spent a lot on prop firms at this point and had some paybacks, the amount I would have lost trading this way in live accounts would be significantly more in real dollar terms. So how have you done the math there?
So after my first year of trading, I hadn't taken a payout. I was starting to get bummed out. I'm a year into trading. I think, and and the first year of trading, I'm not joking when I said I spent every single day, 6 days minimum a week at my desk, trading or watching trading related material or studying or journaling or reflecting. So I put in the work like firsthand. And I was starting to, get a little hard on myself. We're getting close to the end of the year. And then Austin said to me, why don't you do a year-end review, go back, look, see how much you spent. And I really didn't see what he was saying. Then there was another trader in our group that had posted what they had spent on prop firms and what they had taken in payouts. And they had spent like 20 grand on prop firms and taken like 12,000 in payouts. So they were still negative 8 grand.
Yeah.
So I was like, 20 grand. I'm like, oh, now I'm even feeling worse. I'm like, I probably spent 20 grand. Like, how could I do this? Not including Bookmap, mentorship, software, trading
data fees, software, everything. Yeah.
And so I went into my credit card and I'm like, I'm going to do this. I can't fear this anymore. I'm just going to do it. And I went and added up all how much I spent on prop firms. And it was like 5,000 or 5,100.
Yeah, not too bad. Okay.
So I go to put that in the group and I'm like, hey guys, I spent 5,100 on prop firms. It worked out to, I think it was like, what did I say? Like, what's the math on that? 5 over the year, a month, 250, 300 a month or something.
Okay. Yeah.
Something like that. And I'm like, if I traded personal capital, I would probably have spent 5,000 to 10,000 a month because I had access to money.
Yeah.
And I would have just put money in and
keep funding the account.
So I was like, oh my God, like I started telling people like, hey man, like I traded for a whole year and I lost $300 a month. Like that's amazing. And I traded every day, 2, 3, 5, 10 trades a day. So you can imagine how much I'm trading.
That's a good way to break it down, the daily trading aspect of it, because in a live futures account, I mean, I've had some bad days in live futures, losing as much as $8,000 or $10,000 in one day. But you can't really lose that in a prop firm account. You're going to lose the value of the accounts. Let's say I blow out 10 accounts. Even there, average account is maybe $200 per if I have direct to funded. That's a $2,000 loss day compared to an $8,000 or $10,000 loss day. So yeah, right. I mean, overall, you should be losing a lot less over the long run.
And then the kicker, and this is where it went from like a smile to like me just like laughing, is that everybody in our mentorship was putting in US dollars. And I was like, oh, I put in Canadian. That's what my Visa shows. Right. And so then I did the math and I'm like, I lost $3,500 in my first year of trading.
Right.
Like, and it was just like, I went from beating myself up to being so proud of myself that I had the discipline to not put 20 grand in a personal account. And I talked about it many times throughout that year. Like, I'm just going to do this and throw 3 minis on a trade. And it's the prop firm. And then it's when I changed the mindset of like, okay, like you said, a 50K account is $200 direct to funding. I get $2,000 a drawdown. So what does that really work out to? My 200 to 2,000, like, so it's $10 for every 100 I lose. You know what? So at the end of the day, now when I'm 50% in drawdown and my P&L says I'm minus 1,000, actually not. I'm minus 100.
Right. Exactly.
And it really you start to replay it over and over. And Austin always says it best. He's like, as soon as you pay for the prop firm, the money's gone.
Right.
Consider that a loss. Right?
Set a budget for it as well. Yeah.
And now you can be like, okay, I'm spending $1,000 a month on prop firms. Well, that gives me 5 accounts. And I know people that spend $50 a month on prop firms.
Sure.
And it gets
and
them one eval. They trade it. If they lose the eval, they don't get their renewal till the next month. And the thing that people need to understand is you can spend 10,000 or 100. The key is surviving the learning curve.
Right.
Getting through it, getting that. I got my first payout after 14 months. And there's people in our mentorship taking payouts and doing this. And I was just like, I'm going to make it. And I just surrounded myself with people that believed in me. Everybody at home didn't believe in me, except my girlfriend, who was since day one, my biggest supporter.
Big
and
cheerleader.
still is. And I think that is key. Like your partner, if you're with someone, if they don't support you in trading, it's going to be very, very difficult.
That can be really tough. Yeah. You definitely need the leeway there.
And
go ahead.
Yeah, no, like I said, nobody around me, none of my friends supported me. I had 1 or 2 or 3 my good friends would support me. The rest of them, my best friend didn't support me at all. My business partner just kind of.
What are you doing this for?
Because we were business partners, and he didn't acknowledge it. And he thought I was, get rich quick scheme, and he literally was my biggest proponent. The biggest person against me was the closest person to me, outside of my relationship with my partner.
Gotcha.
And so it was just surrounding myself with the mentorship, the group, and becoming friends with people and going to in-person events and just realizing that other people believe in you. And I think when somebody else believes in you, it becomes real.
Yeah, I can see that.
Right. So that was a big turning point for me. And just surrounding yourself with like-minded individuals, I think, is really, really key early on in learning to trade.
I want to know how that's changed for your personal relationships, but maybe before we get there, can you help us understand, now that you've done the math on the accounts and now that you've had some progress here for the last couple of years, how much has gone into firms and how much has come out? Have you had some success in doing this?
Yes. So I am coming into, well, let's call it, what are we now? November? Yeah, November.
November now.
I'm still profitable. So I've taken about 10,000 in payouts this year, and I'm still up almost 8. So I don't think I will be going into drawdown. I'm actually set up. I have some top step 5 accounts that are qualified for a payout, but I'm practicing delayed gratification, and I'm not going to touch them till the end of the month. And hopefully I can take a decent size out of them. Everything's looking good. I got my risk settings in place. So worst case scenario, I have to lose every day for 20 days straight. Or if you don't reach through the screen and slap me, if you see me losing for 20 days, there's some other people that will, right? So this is
and listen, even the best people I've talked to who've been consistently profitable traders still have insane losing streaks sometimes. You just, especially in prop firm trading, you're given about the tightest risk controls or leeway possible in trading. And to the point we were making earlier about live futures trading, the brokerage isn't going to cut you off from losing $10,000 in one day. They'll let you do it. You have plenty of leeway when it comes to running a live futures account. But in a prop firm account, your rules are so tight that the likelihood of failure is extremely high. We just said it earlier. It's 3% of people get to payouts, and even less percentage of that make it to live, get called up to live. So this is an extremely difficult game to play. All of us at some point should end up on 6-week streaks where we just can't seem to nail the trades because it's extremely difficult to do.
And that's where I think as you learn to trade props, and you just even learn to become a better trader, you start to understand that when you're down, you don't swing harder.
Right.
You start to just really, and that's where it's like with these accounts, I'm developing this approach of, okay, if I'm this much on drawdown, I got to cut my size in half.
Right.
I get this much further in drawdown, I got to cut my size in half. And then at some point I have to understand, okay, I might swing for the fence here, but this account's going to be, there's a fine line also with prop firms. And we didn't talk about this, and I talk about this a lot, is getting attached to the accounts.
Okay. Yeah.
So at the end of the day, when you become confident in your strategy and your trading system, and you have a decent win rate or whatever it is, whatever metric you look at, how many your win rate, your profit factor, whatever it is, you can't attach yourself to an account, because at the end of the day, you got to be making money in prop firms too.
Correct.
So there's no validity in trading a instant funded account or the same combine. I will say not a different one every month because you failed it. But if you've been trading the same evaluation for 3, 4, 5, 6 months, you start to got to understand time is money. And now for your $200 investment in your instant funded account and the $3,000 payout, if you're doing it over 6 months, what is that? You're really making, a few $100 a month if you took it after 6. This is, again, a tough conversation to have, because I think when people are learning to trade, it's different. But I still remember my first set of XFAs I traded for 4 or 5 months. And for 4 of those months, I was basically completely in draw. Like the accounts were almost blown. I was trading 1 micro, getting $50, keeping the account alive every day. And it wore on me. And again, being part of a mentorship, Austin noticed it and said, Randy, like, I'm just going to be honest with you. You're doing a great job treading water, but you're not treading water like a personal account here. You're treading water in something that if you let go of these accounts, you can just start again. And instead of having to get all that drawdown back and then hit a profit target, you're starting at 0 again. Do you know what I mean? Like,
yeah.
It's tough to explain to people, because like, I know I've explained it to people and they're like, are you telling me just to blow the account?
I kind of have to agree with that, because at some point, especially if you're really close to that drawdown, the max drawdown amount, right? Like, let's say you have $300 of drawdown left. That means that in many cases, you've got $2,700 or more of profit to hit just to get back to break even, plus another $6K of profit to make on top of that. Is it just cheaper to blow the account and start over back at the starting point where your profit requirement is smaller? That's the way I've looked at it a few times. If there's just barely anything left in the account, there's no point in even trying to get back.
The $200, like I said, the $200 is gone. You paid for it, right? And now you just got to chalk it up. You got to chalk it up that this was a $200 trade I took, and I lost. I lost my $200. It's the market's taken my money.
Right.
I'm going to put another $200 into the market, and I'm going to see now if I can get to a payout. Right. So it's definitely a fine line, but I'm glad that you understand. And most traders that take trading seriously will understand. I think in the first year or first 2 traders, you're still trying to find your way trading. And trust me, I've seen more than enough people quit trading. I've been in the same mentorship. It'll be coming on to 2 years. And I can tell you, I've seen a lot of people come and go.
Yeah, that makes sense. I mean,
and you see the people that stick it through. Yeah. You see the people that stick it through, and they understand it. And there's just some people and that's okay. Trading's not for everyone. You know, if you don't make it at trading, it's all good. You might go and do swing trading and be successful at that, or trade options. Like, it doesn't have to be, there's no right or wrong to this.
I totally agree with you there. So what's next? What's the next big goal for 2026 and looking into the future? Where are we going here?
So I've really been working on copy trading, and thanks to obviously TradersPost, I'm starting to get my feet in the water. How would you say that? Like my toes in the water.
Your toes in the water.
I start to really get confident and comfortable in my trading. Now it comes, and I think this will come for some people when they get to that part in their journey, year 2 to 5 or whatever it is, the scalability.
Right.
And I think what you guys offer with TradersPost, and there's other companies that offer it. So by any means, I'm not just saying you have to use TradersPost.
Yeah.
But what you guys offer
we say that everybody has to use.
Well, you know what I mean. I don't want it. I will say that, but I don't want people to be like, no, he's right. But anyways, you know what I'm saying. By far, you guys have the best product on the market. I'll straight up say that.
Appreciate that.
And I think your product is designed for so much more than copy trading, which I think when you get into copy trading, you need to have a lot of options, and people don't understand. It's Project X makes it easy to copy trade, and it's so seamless. But when you do that over scale, if you're not dialed in, your $200 prop firm spending allowance for the month will turn into 2,000, will turn into 10,000, will turn into 20,000.
Right.
There are people don't realize that there are people in the prop space that spend 40,000 to make 50,000. And it happens all the time. They take payouts and they get a bunch of money and they just put it back in, and it's just like a casino, and it's just revolving, and they'll show you their big payouts, but you have no idea what their
How
credit
much
card
they've
and
spent.
stay
Yeah.
to get
I
there.
think that's
right?
the thing. You got to set the budget for it and treat it like a risk reward in of itself. If I'm going to spend $500 on accounts, I need to be able to make at least 1,000 or 2,000 in paybacks, right? Or in payouts on average over the month. You might have bad months, but if you spend, let's say, $1,500 over the next 3 months, you're expecting a return on that investment over the long run, right?
The most successful guy I know when it comes to copy trading in the prop space, and that's Nick. Obviously, you know Nick.
Yeah.
Trades a personal account attached to his prop accounts.
That's right. Yep.
And he manages everything based on that. And the beauty of TradersPost is you can go in and really fine tune individual accounts and just focus on one thing and forget about the 5, 10, 15, 100 accounts, whatever's in the background, because you've already set all your parameters and your risk and your and all this stuff that it's like, I just want to focus on the trading view, my chart. Like I have it now with TradersPost where I don't even have an account attached to trading view. Like when I enter the trade, all my accounts will be in separate windows. So I can just click to make sure it goes through. I see on the dashboard, but in trading view, you just see my long or short position.
Yeah.
And you see price move in it. There's no ticks. There's no nothing. My stops here, profits here, whatever it is, right? So it's
simple. Yeah.
And I think that's the thing to trading. You got to simplify it. So the big goal for me anyways, 2026 is I set a goal after my first in-person event in 2024, it would have been, I think, that I would one day speak on stage.
Okay.
So in May in Tampa, I'm going to be speaking on stage. And honestly, to keep just working towards this goal of scalability, but I think along the way, just embracing the journey and really getting the DMs that I do in my inbox of one person saying, hey, I saw your trade you took, it reminded me of this and I stayed out of it. Like, thank you for being transparent. Just really, I think 2026 is going to be a big year. I really am big on changing the social media space and giving people options of whether it's, hey, I want you to meet Mike at TradersPost or Nick Jocelyn or Austin or whatever we do. It's just like, I never realized how bad it was and how many people get their money taken from them, not even from prop firms, just from people online that say that,
or courses or whatever.
And it's just, it's crazy. Right. And I think I told you the story, but the big tipping point for me was I saw one guy and he was selling his levels and I forgot the guy's name, but he's like, buy Mike's levels. Mike's secret levels, he called a market on Instagram. And I was just like learning to use volume profile. And he was just taking the session volume profile indicator, drawing levels using the indicator, then turning the indicator off and saying these were his levels and charging people for it. And I was just like, and so now whenever I say it, I say it's a free indicator.
Yeah. Well, I think that's kind of the beauty of these courses is you're going to learn how many people view the market in the process. I don't think you should ever have to pay for that because there's so much information on YouTube that is 100% free. Watch a couple of ads and you'll get a full graduate level education on this stuff from YouTube. Yeah, for sure.
And I think that's the benefit of, like, we started our own podcast, me, Christine, and Thomas, 3 traders I met through a mentorship. We become best friends. Yeah. And our podcast is strictly about year 1 to 5 and the shit that happens in those years. Not, hey, I took a payout, this is what I did. Hey, I made $1 million, this is what I did. It's like, no, I actually blew this account, this is what I did. Like, you know, like real conversations, which is lacking in the space, right? Because it's everybody wants to hear about the wins, but nobody wants to hear about and you'll see there's episodes where I've come on, or Christine's come on, or Thomas has come on just after tilting, and you can feel it. You can feel the energy, right? And you can see your partners pick you up and and try to understand what happened and dive into it. And then, we just have people on that have real conversations. We'll have you on, obviously, and it'll be a great show. But this is what I mean, like, just I think getting more information out there, and then just becoming, I got big goals. I want to fly on a private jet. I want to make a shit ton of money, and I'm going to. It's going to take time, but I'm not doing this to make, a couple bucks a month. I'm doing this to make it full time. And we're going to be going back to Mexico and hopefully in the new year, probably going down for 8 months a year.
There you go. Yeah.
And I wouldn't be able to do any of this without trading.
Yeah.
Right. So it just goes to show you that I just kept sticking to the process. You have your ups and downs along the way. Don't be hard on yourself. Be super kind to yourself. Surround yourself with people like you.
Right.
Find people and build a community. And I think that's huge, is become part of a community. You don't got to pay for it. There's lots of free stuff. We have a free Discord that we do from our stream, and we got like 15 people in it. And it's just like everybody just hanging out, chatting about trading, right?
Right.
So
this is what I think there is a shift finally taking place, to your point about transparency. One is that the demand for transparency and telling the real story here is growing. I think people really appreciate when you share the struggle and the losses, because it helps us understand how we're dealing with that. I'm coming out of my own 6-week slump right now where I lost a bunch of accounts. And I've just been spending the last several weeks analyzing every single trade, trying to understand what happened there. Where are my fall off points? Where am I going wrong? And I've come up with a bunch of data, and so I'm about to publish all of this, and I'll bring it to the show that you guys are going to do with me as well, because there's no better education than what happens on the loss side. I saw a tweet recently that said, the best traders aren't really obsessed with all their winning. They're obsessed with how to not be as stupid anymore. And I think that's such a good observation. Really, we're just trying to tear away all the mistakes and leave the good stuff right in the middle, because we're all doing a pretty good job, but then we make mistakes along the way, and it's about reducing mistakes. So, and
that's why I'm super I'll quickly add to that. Like I said to you today, this morning, that I'm working on coding a bot.
Yeah. Right.
Because I believe I can read price action and see things in the market very well, but I can't control the impulses sometimes.
I'm with you. Yep.
And if I'm able to put everything into code and just be like, do this, and not remove myself emotionally from the trade, it's going to be really interesting to see those stats. I agree. And I always thought a bot is something somebody made for you, or, it's cheating the system. Well, our last podcast we did with the guy that made his own bot, just went out, didn't know anything about coding, just went to ChatGPT, figured it all out on his own, and did this bot. And I started seeing his markups, and I was just like, and they're basically his trades, but actually holding into profit, not cutting them sooner, and all these things where he's like, do you know how many times I left money on the table where the bot doesn't give a shit? It's just, I know what price action is doing. I'm just going to keep going for my profit target, where it's like he stopped multiple times. He took the bot out of the trade, like closed the trade and profit. Right. And the trade went another 30 points. Right. But he's like, he never seen that much profit on a trade that he was just like, the human emotion kicked in. Right.
Exactly. So, I think that's a good observation too. And I've always thought that it would be best to be both an automated trader or systematic trader and discretionary trader, because at some point, being somewhere in the middle helps you understand how you can take that live interpretation of the market and apply it to some of your systematic, but then use systematic to apply it to some of your discretionary trading. Like we're working on an indicator with Tyler G. I'm sure you found him on Twitter before. And he's got this inversion strategy he's working on, and we're helping him build an indicator for it that we're going to help him publish over the next week or so. And he's super pumped about it. It helps him at least see the data and then not miss the trade, because it's such an infrequent trade that he's looking for. So stuff like that, where you can combine your a systematic approach with your discretionary trading, you can definitely be in the middle there, be sort of a quasi systematic trader. Maybe the other point too is that we need as much information as possible sometimes, and in today's day and age, the barrier to entry for automation was really that people didn't know how to code, they didn't know how to put the systems together. But you have Claude Code now and ChatGPT Codex that do a phenomenal job of building basic indicators and helping you understand how to code in general. So it's never been more accessible than it is today. And this is coming from somebody who's been coding for 22 years. Like I know how to, I write in multiple languages, and it's easier than ever now. So.
And to even add to that, and I love how you said the systematic and discretionary approach.
Yeah.
And, coding a bot is not the answer. Because this bot that I could, like, I'm just saying in general, you're not just going to code a bot and put it in the market and be profitable.
No, it doesn't work that way. Bots lose just as much as humans do.
The bot that I coded over the last 90 days, it had I think like 35% win rate with like a horrendous drawdown. But over the last 30 days, it had a 70% win rate with 0 drawdown. Sure. And it took 6 trades. And this is where I never understood, and this is where, like, having this conversation now, and I did with Troy, who was on our podcast, and he's like, this is where discretion comes in, and you have to understand that the bot is it's going to play to whatever market conditions are going on.
That's right.
And it's going to constantly be changing. So this is where it being discretionary is. So right now I have the bot running, but it's not taking trades, but I'm using it just to see where it signals.
Just the information. Yeah.
The information. And I'm going to start to understand, and maybe I don't run the bot and I still use discretion on trending days, but I just have it signal. Do I like this setup? I'm going to take it.
Right.
Right. So it's that I love about it still, because I'm a big discretionary trader.
Yep.
I trade with a lot of like intuition and gut and feel on order flow and whatnot when I hold into trade. So.
Well, I'm definitely excited to see how that plays out for you as you scale out from here. Looking forward to 2026. And I appreciate the time here today. It's been fascinating learning your story. Sorry to hear about the Valiant trade. Yeah. It's funny. I watched this whole documentary on short sellers, and I know about Valiant just from that documentary and how Bill Ackman was involved. So sorry to hear you were on the other side of that one, my friend.
No, it's all good. There's the guy, Andrew, I think Andrew Left was his name, but Citron. The company was called Citron. It's a short report company. He was a nobody until he did that Valiant report. And now, since that day, he's probably a frequent guest on BNN talking about short selling a company. Like, it just made him.
Yeah.
So, very, very interesting. But no, thanks. And you know what? I'm still here. Everybody out there that's trading, if you want this, it's there. It's attainable. Just be realistic. Be kind to yourself. And just, embrace the journey. Don't forget about the payout and forget about, being rich. Those things the thing with trading is if you can embrace the journey and be consistent and follow your process and follow your rules, there's no reason why you can't be profitable.
Totally agree with you there.
All right.
Well, thank you for the wisdom, Randy. We'll catch up with you on the next one. Thanks for joining us on Price Action Live today. You guys can catch that on Twitter and on Randy's channel as well. And let's look forward to maybe catching up again in 6 months or so and see how things have panned out for you.
100%, Mike. Appreciate it. Thanks for having me.
Awesome. Cheers, Randy.